If you want to know if a market is truly broken, watch what happens when the lights go out. Now, last Friday, after the markets were closed in the U.S. for Thanksgiving, the CME group, the engine of global price discovery, well, it went dark for about 10 hours. Now, the official explanation was a, quote, cooling failure in Chicago. But while the screens were black in the U.S., Asia kept trading, and the physical market told a very, very different story. Now, silver didn't just rally, it made history. And if you look at that chart, I mean, this morning, silver shattered its 1980 and 2011 peaks to hit a new all-time recorded high of 57.86 an ounce on the spot side. And meanwhile, Shanghai inventories are at decade lows. London has been relying on emergency tonnage. More talks, of course, of that silver squeeze over there. And Western paper markets are visibly decoupling from the physical reality. And I should say, I mean, gold is steady above $4,200 this morning. But the real signal is the gold-silver ratio, which has collapsed to its lowest level of 2025. The so-called poor man's gold is now leading global markets. And meanwhile, Bitcoin has cracked below $85,000 US. And the companies that once promised they would never sell are suddenly raising cash. Now, the liquidity that floated the crypto boom is starting to disappear here. My next guest saw this coming months ago when he was on this show in September. Now, he sold Bitcoin at 100,000 and he called silver a retail juggernaut. And today, the market is moving exactly in that direction. Joining me now is the CEO of Online Blockchain, founder of AnewFN.com, one of our regulars, Clem Chambers. Great to see you, Matt. Welcome back.
Great to see you too, Jeremy. Great to be right as well.
Great
obviously.
to be right. Yeah, I was going to let you just run with that for a moment. It was a great call. I mean, you were kind of pivoting out of crypto, and we'll get to that in a moment. But I mean, you know, let's start with this moment that we're kind of living through here, Clem. I mean, silver read $57, the highest price ever recorded, but it happened while the CME was offline for 10 hours. I mean, here's why I wanted to bring you in and talk about this. I mean, you've built infrastructure for 30 years. You know how these data centers are built. They run N+2 redundancy. Be straight with me here. I mean, does a broken fan really take down the world's largest derivatives exchange during a silver squeeze, or was that a circuit breaker pulled to stop? What are your thoughts?
Does. No, it sure does. I remember having being in a big service center with one of my sites. And they were redundant with they had battery backup, they had generator backup, and they had power. So this was actually on Wall Street, and the power went down. So the generators went, oh, that's not good. And the batteries went, we're flat. Didn't anybody tell you? So the whole thing went down. Okay. So that's an example. That was about, 20 years ago. And at another site, and another decade passes, and I was in another site that couldn't possibly fail. And they had someone put a backhoe through their cable. The next door they were building it, someone took a backhoe and cut their electricity. So guess what? The box that was meant to go, oh, hello world, the power went out, clunk, we're switched on to the generators. That hadn't been configured. No one had configured it. So boom, it went down. And they couldn't actually configure it because they had no idea how to do that. So they had to fly someone in from Seattle to London right away to get him to actually program it so that he could switch over to the generators and to the batteries. And it took them, fortunately, it went down on Friday night for us and we were market side. And it took them to like Sunday evening to go, hold on a minute, clunk, 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 up it came. So that's the typical thing. It can never fail. No. Redundancy. Oh, redundancy from redundancy. Oh, so many redundancies. Oh, no single point of failure. Bang, down it goes. So, yeah, it absolutely can happen. And it absolutely does happen. We had Cloudflare blow everybody up only a few days ago. And, it couldn't possibly. Bang. So it can very, very, very much happen. But of course, if you run out of silver, you can't just start a silver mine overnight and pull out silver. You can't suddenly get it. OK, and so, you can do all sorts of things with computers. It takes a weekend. But when you run out of silver or the masses show up and say, give me some of that, will you? It just isn't there. And they just can't get it. And silver mines take 5 years to dig. So, oops.
Yeah. You're well said. Okay, well, I'm glad that you got to that because, of course, it was on a day that the markets were closed. It brought a lot of conspiracies out, right? Talking about how this could be a deliberate kind of pull to the plug. It would be career-ending for the regulators. I mean, it could be plausible that this high frequency algos maybe overloaded the system. But on the squeeze that you're talking about, I mean, December now has about 7330 contracts standing for delivery. That's about 36.6 million ounces. COMEX only has between 70 and 90 million ounces of registered silver available for delivery. I mean, that means in December alone is half the entire deliverable inventory. I mean, even if a fraction of those contracts demand actual metal instead of cash, doesn't that imply that COMEX simply doesn't have the metal?
Yeah, but you see, that's all noise. Now, if it suddenly, there was this big squeeze and tomorrow it went to 95, I'd probably sell. Yeah. But if it doesn't go to 95 tomorrow or the week after that or the month after or by Christmas or by next Christmas, when it gets to 95, I'll probably sell. And I really, really don't care whether it's today, tomorrow, next week, next month, next year, or the year after that. That'll be fine by me to hang around for 18 months, but I think it'll be faster. So, if you're chasing the daily move, you're a day trader. Yeah. That's a great way to lose all your money. If you're chasing the move in the next 3 months, well, you're positional, and that's quite a sweet spot for these sort of things. If you're strategic like I am, you don't really care. I won't be sweating until we get in the 80s. And then I'll be going, what about tomorrow? Because it'll be approaching that, 100 that I see is not fate, but likely. Yeah, okay. It's likely going to 100. When it gets there, I'll make a decision on whether I think it's going to go to 200 or not, which it probably won't. So, it's like if you're going to be an investor, that's the best way to be. You can't help watch it every day because it's fun, right? But all this short-term stuff, it's like back in the day with Bunker Hunt. Oh, it's a corner, it's going to go through the roof. Oh, they changed the rules. Oh, it didn't go through the roof. Yeah. The point is that silver is a strategic metal. There's not enough of it. And one way to look at it is this. Gold, 3,200 tons a year is mined. Silver, 25,000 tons. That's 8 to 1. Yeah. That's all you really need to know. And if all of a sudden there's more demand for it than there is supply, it will go to some sort of balance. Yeah. And, is that demand going to be maintained for the long term? I believe it will. I think silver is going to be very, very important in what's up for next. So there will be the use case for silver is such that its price will be significantly higher than today. So although I can do, the silver is running out dance, I don't really, it doesn't bother me. If they run out of contracts tomorrow and it goes to 200, well, yeah, I'll sell. Yeah, because that will be a short-term thing. The long-term price is different. Mm-hmm. And that long-term price, if you want to really know what it is, just look at a sort of moving average and look at the trend on the moving average. And if you go back, say, 100 days, 200 days, 3 years, don't care. It will be on that trajectory, and that trajectory will keep on grinding up. So, the true story is somewhere between where it's going to be in 3 months and a year. Okay. And I'm riding that picture, and that picture to me is $80 to $100.
$80 to $100. Okay, because I was going to say, Clem, if 95 is your exit, what specifically gets us from 58 to 95? Are we talking that structural shortage you talk about? Is it more sovereign accumulation, or is it just a full breakdown of paper? What's the actual catalyst for your model going into 2026? Never thought I'd say it.
It's not a sovereign demand. Yeah. Sovereigns don't care about silver. They care about gold. Yeah, sovereigns care about metals or value they can put in a battleship and sell somewhere. And silver's too light for that, which is why the Americans threw it in Manila Bay when they left the Philippines in the Second World War, took the gold, threw the silver in the bay. It's too light, okay? I would say if I was really thinking that was coming, which it probably is, platinum and palladium's good for that because that is heavy and you can pack a lot of that into a sub, but not silver. However, silver is a strategic metal in two places. One, at retail. And when retail are seeing gold doing what it's doing, and it's going to carry on doing that, they start to think about, I think I need to load up on that. And of course, gold is, for $50, you get a tiny piece, whereas silver, you get a nice shiny lump. And $100 is still a nice shiny lump for $100. $100 don't get you much shiny these days. Yeah. So with retail going with the flow, getting a bit of FOMO, that is the juggernaut. That is the unstoppable horde. And if they get a flavor for silver, and they are getting a flavor for silver, they got a flavor for gold, now they're getting a flavor for silver. Well, that's a juggernaut that will drive things to $100. Now, behind that is the strategic need for silver in AI. And any hard commodity is going to stop being a commodity. It's going to become a luxury. And I've been saying this, it only dawned to me. I was at a gold show, the Gold Messe show in Frankfurt, with a lot of people that have been following gold and all that stuff for a long, long time. And they're talking about commodities. And that word was just buzzing in my brain. I thought, these aren't going to be commodities. They're just going to get sucked up by the AI maelstrom. And they're going to have to be luxuries. Yeah. And silver is one of them, because silver is the best conductor of heat. And AI is going to be all about getting rid of heat, because you've got to pump so much energy in. Now, if you think about an AI service center and they're building them, they're going to cover the world with these blooming things. You have all this stuff in a shed, and energy comes in and information comes out, and the information comes out on a tiny little piece of string, tiny little optic fiber. And all those resources are going into that big metal box full of raw materials, full of gold, silver, rare earths, cobalt, you name it, lithium, fancy cooling stuff.
Yeah.
And that is the future. All those wonderful commodities, which we think of as commodities, because you get loads of them at a low price, that world's going away. And, that's going to be actually turned into great things. But, it's all going to get sucked into these server farms. And you just have to see what they're building out there. Was it $1.5 trillion going into that? 1,500 billion. Million.
Yeah.
It's just huge sums. And mainly it's going into the sort of raw materials that make the sort of things that NVIDIA make, and all the cooling and all the racks and all the cabling and all the transformers. It's really down there at the base of the value chain. Yeah. And it's going to take it all, and it's going to take all the energy. And, what does that do to prices? Well, if you think about commodities, if you think about your iPhone, you think about how much raw materials is in that $900 or $1,400 piece of kit. It's not that much. It may be $150 of stuff, which is, a good model if you're melting it back down again. But if it actually went from $150 to $500, how much will that change the picture for the price of that iPhone? Not hugely. So there's plenty of room for these foundational items to go up a long way without actually affecting the day-to-day price of things. But that is coming. And the big one that is really coming is this stuff's going to take all the energy, absolutely all the energy. And that's why they're building nuclear power stations. And just think about nuclear power stations. Why the devil are they building nuclear power stations when they were actually Satan incarnate only a couple of years ago? Well, because all the energy that you could possibly imagine is going to be used on this stuff.